Good morning, everyone. CC here. I'm joined today by a very star-studded panel. We're going to discuss the overall health and outlook of the shipping sector. Now, our aim today is to distill through the big data and research to provide a very clear and succinct picture on the shipping markets. Now, to add some structure to this half-an-hour session, I propose to do this by breaking down into two parts. Part one, we're going to be focusing on shipping markets with a macro lens. What are some of the factors affecting each sector of shipping? Part two, we will focus on the individual stories and developments within each sector. Now for part one, shipping markets, as the panel earlier alluded to, is doing incredibly well. To put a number on this, the Clark-C index, which measures earnings across multiple indexes and sectors within shipping, is at $39,000 a day to date. If we look at sort of 10-year historical averages pre-COVID, that number is $12,000 a day. So we're pretty much more than 3 times above post-global financial crisis levels. In addition, during the previous market boom in 2008, the Clark-C index was at about $35,000 a day. So this year is expected to exceed 2008. Secondly, in terms of asset prices, there are about 100,000 merchant fleets on the vessel today. That fleet 2 years ago was valued at $1 trillion. Today, this is 40% more at $1.4 trillion. Obviously great for financiers in the room, a much bigger pie for vessel financing, and obviously stronger earnings to back this. Now, if we were to analyze why the markets are so strong today and supply and demand fundamentals, the demand picture isn't that great. For the past 3 years, if we look at shipping demand measured by ton miles, it's only increased 1% per annum. And if you contrast that to pre-COVID days, that number was 3%, and during pre-global financial crisis days, that was 4%. So we've seen demand sort of gradually tailing off. So we know the strength comes from supply, primarily 3 reasons: supply chain leading to heavy congestion, obviously low levels of contracting, Abhishek has mentioned that earlier, and slow steaming of vessels due to higher bunker prices. So maybe for part one, I would like to focus on JJ, Regional Director of MSI. JJ has a lot of experience in Chinese shipyards, having worked in CSSC Jiangnan. I would like to ask you questions on the supply outlook. Mainly if we look at fleet additions, i.e. the order book, versus fleet demolition, i.e. Removals. What is the anticipated growth in the next 2 years? And also if you comment a bit more about the actual vessel supply, also driven by congestion and speed. Over to you, JJ.
Sure. It's a good question, CC. I think you bring that good topic. In 2008, the global shipping boom is key driving is by demand. But this time is actually by supply. You're absolutely right. If you see the order book in 2008 by compensated gross tonnage to fleet size 40%. At the moment, it's only 13%. In this 13%, the delivery will be 31 million CGT will be delivered next year, and a scrapper will be about 90 million will be scrapped. So the net growth will be only 12 million CGT. If you by growth rate, it's only 2% next year, and then year after only by 1%. And if you compare with the historical highest, it was actually 2010. It's 7% fleet growth. So in that point, fleet growth in next 2 years will be quite moderate. We know, the fleet speed reduction during the EEXI and CII will have some impact on the speed. That hand, there should have some gap to need additional tonnage to supply this additional requirement. However, MSI believe the impact is not so significant. It's like everyone driving your car, you got a maximum speed or design speed. Probably very few people will touch that speed. But in the congestion side, MSI believe 7 to 10% of fleet actually be stuck during the congestion. So we believe the congestion will release more tonnage compared with the additional tonnage requirement. Of course, each sector is different, each age group is different as well. So we believe, like for example, like a tank fleet next year or year after, we're going down by 2 to 3%. And a container, because of heavy delivery, so next year or year after, we're going up at 6 to 7%.
Thank you, JJ. Maybe I'll move on to the demand side of the equation. Arjun, Managing Director of Drewry. Now, the panel before us talked a lot about 3 factors that could impact the demand side of the equation, i.e. deglobalization, which we now know is globalization will still occur. It will just be a lot more expensive for businesses to do so. Conflict and inflation. Maybe I'll split my question into 2 parts. Part 1, is this 1% demand per annum growth going to be the new norm? Can we see a reversion back to 3 to 4% days? I think Eric earlier talked about China and it potentially when it recovers and it's switching back to an export-driven infrastructure, that would be good for shipping. And secondly, if a recession does occur, what will the impact be and how will that filter through to shipping markets?
Yeah, I'll take this question slightly differently, but take a long-term perspective. I think the start point, I think the panel before discussed about deglobalization, interest rates, high US dollar, etc. I think it's very, very clear to me that shipping or seaborne trade has gone through an incredible golden era from the 90s. China joining WTO, and we've had incredible growth in demand. This golden era has not necessarily given golden returns to the ship owners, but the growth for seaborne trade has been absolutely incredible. And most of this has been driven by cheap freight. Ship owners have subsidized this huge growth. I mean, yes, we've had periods of volatility, but ship owners' low freight has been the driver for this growth. I think looking forward, and now we can go to, as we come and carbon, the full cost of shipping is factored in, higher interest rates, higher US dollar, I think we're going to go through an era of substantially higher freight rates. Yeah, and I think that golden era has come to an end. And yes, I think long term, in the medium term, seaborne trade will grow slower. But actually, if we look at the long term, 2050, net zero carbon, I think we're going to see a shipping industry which is incredibly different to what it is today. You know, we know coal, big gorilla for the dry bulk cargo, it should be broadly phased out. Oils, I am sure we'll still be using crude oils, in 2050, but in a very different way. I think we will see an industry which completely new types of ships, new types of commodity trade, and I think a smaller industry.
Thank you. Very nice, optimistic picture of green vessels and high technology and
high opportunities.
And high opportunity, as Abhishek was mentioning earlier.
For those who wish to change.
Yeah, no, absolutely. Maybe now I move on to Pietro. Pietro, JJ and Arjun covered quite a lot of ground on supply and demand fundamentals. What are some of the other factors at play here that could significantly alter either the supply or the demand side of the picture in the coming years?
Yeah, I think this is quite an interesting situation that we are facing at the moment. And as mentioned before in the previous panel, and also by Arjun and JJ here, what we see here is a cost situation. I mean, there is the need for investments, especially in terms of new fuels, which is it's not simply mandatory because it has to happen. I mean, we are 7 billion people in this planet, and we have to think about the future generations, and things have to be done. And on the shipping side, although people look at shipping as a sort of a villain, I mean, if you look at the real numbers, the impact that ships cause to the market it's not that big. But it appears because ships are big. They move around the whole world, they sail in the 7 seas, et cetera, et cetera. So something has to be done. In my view, I think the biggest issue that we are facing here is this question of cost, and this will have an impact on the supply and demand as well. In my view, I think decarbonization is a fact. I mean, we have to look at the future on this. The targets for 2050 are quite ambitious, and unless things start to be done right now, I mean, it won't be possible to be met. Okay, so fossil fuels, forget it. I mean, it has, they'll come to an end. What we are talking about now, LNG is probably one of the solutions which doesn't solve the whole problems. So if you talk to different people, you're going to get different opinions. My personal opinion is that nuclear is the future. It's the only one that represents zero emissions. But there is a lot of things that needs to be done. And as, going back to when I started talking here in terms of costs, I mean, investments are needed for research and development on these things. And, but I think it will pay. It will pay. Because it is the only thing that we can see as being zero emissions, and there were a lot of threats, a lot of issues of people saying, oh, if we're gonna put nuclear engines on ships, the vessels are going to be hijacked by terrorists to use the engine to build nuclear bombs. I mean, my gosh, I mean, this is not the case. I mean, this is totally different. Nuclear is indeed the future, as far as I can see. But again, there is cost involved, and everyone has to be involved in this. There was a time that in our industry that if it's costs related to ports, I mean this should be in the hands of shippers and receivers. If it's something relating to ships, it's going to be from the pocket of the ship owners. But I think today, this should be shared by everyone. So we should be talking to banks, insurance companies, ship owners, charters, traders, everyone. If everyone come together on this, I think we're going to find a solution which is going to be viable, cheaper, and eventually, sustainable for the future generations. That's my personal, humble view on this thing.
Oh, thank you for that, Pietro. No, I think we've covered quite a lot of ground from supply, demand, and I guess from the angle of decarbonization. Maybe if we could wrap up part one on sort of shipping with a macro lens. Now, as analysts, we have to put forecasts, we have to put money where our mouth is. I'm going to ask you to put the shipping sector in either green, yellow, or red. Green being everyone in this room is happy, your equity investors are getting a strong return, financiers are fully paid off, ship owners are making money. Yellow being only the debt and the debt people are happy, perhaps the equity investors aren't getting the returns they desire. And red being no one is happy, ship owners are struggling to sort of generate cash. Maybe I'll start with you, Arjun. I think you've painted quite a positive picture already. Green, yellow, or red?
That's across shipping, across the board?
Yes, across the board.
I think broadly green. Green, yellowish.
Thank you. Cautiously optimistic. JJ?
I put it positive because the supply really very thin in next couple of years. Maybe some sector will suffer, especially container sector. Generally, it's positive.
Yeah, I'm very bullish as well. I think it's it's a totally different world that we're living, and all the fundamentals they lead to a much better condition for the future. And one of the advantages of this industry is the transparency. So it's easy for you to not that easy to forecast. Don't take me wrong, but I mean it's easier at least for you to see the signals that show what kind of trend we're going to have, and I am very, very positive about the future.
Thank you. For any credit discussions, please use this recording as an example to share to your credit team. Moving on to part two. Now, I think there are a lot of interesting discussions that are happening within each sector. Obviously, earlier I talked about the Clark-C index at $39,000 a day, year to date. That obviously masks very different sector movements that are occurring within the market. At the start of this year, this was probably driven more by bulkers and containers being very strong, but that index today is being driven more by tankers and gas. So maybe I'll start with the LNG market. I think it's very exciting for two reasons. Arjun and I, we spoke last week, and LNG spot market was $140,000 a day. Well, at the end of Friday, it kind of closed at $300,000 a day, a record high. And secondly, I think the LNG market is very relevant for a lot of our counterparts in Europe. I had a Danish client who flew into Singapore a few weeks back, and he was saying his electricity bill is 4 times higher this month than it was at the start of the year. Arjun, you obviously have decades of experience in LNG Journal. You were director there. I would love to hear your thoughts on what is the latest sort of Russian LNG situation. Is it net positive or net negative for the LNG market? And any insights into whether this is going to be a long-term effect or is it going to be short-lived?
I think LNG, we have to look at it as two parts. Russia-Ukraine issue is recent, but I think the underlying market of LNG has to be seen on its own. And I think broadly LNG was a reasonably cheap alternative to the fossil fuels, coal and oils for power generation, for fertilizers. And if you look at the sort of liquefaction capacity coming in the next 3 to 5 years, it's huge. I mean, the growth, and that's the infrastructure is a huge driver of the market and the LNG market because you need huge infrastructure. So we've got huge increase in the supply of LNG, a very large order book. Now, the timing of both ships and the cargo is clearly very important to see where the freight rates will go, but clearly the LNG market without Russia, Ukraine was set to grow at an almost unprecedented pace. So hugely positive for the LNG market before Russia. Now clearly, the mind boggles how Europe was so dependent on pipeline gas from Russia, but anyway, they are, as you know, and with the shutdown of Nord Stream, Europe has a problem, and definitely a problem this winter, and possibly for the next, I don't think they will ever go back to depending on Russia for pipeline gas. So, the LNG market today is completely on fire, both to fill up all this LNG storage which is available in Europe, all the FRSUs, this is the reliquefaction ships with regasification capacity, all chartered in. And as you say, the spot market, $300,000 a day. So yes, the short term or this $300,000 a day sort of market is very dependent on what happens with Russia and Ukraine. But I think long term, LNG is going to be a very positive growing market. So, where the freight rates, that's going to be volatile clearly. But yeah, I am very positive for that market.
So under the traffic light system, green?
Yeah, green, no doubt. I mean, I think, the question is really, when you say green, is it going to be green for ship owners or for the traders? But the question is, the market is going to be rising. Quantum is going to be rising regardless.
Thank you, Arjun. Maybe we'll move on now to Pietro. Dry bulk is obviously your sector expertise. You have almost a decade in Vale prior to you joining Banco Costa. Now, earlier we've heard about the Chinese story. I would like to get your thoughts on that, firstly. And secondly, JJ came by my office earlier this year, and he sort of mentioned that if congestion did not exist, we know almost a third of Capesizes is locked up in ports right now. But if congestion did not exist, the bulker market would be 40% weaker than the kind of levels we saw at the start of this year. So and I guess you also talked about nuclear as well, and I guess if nuclear power is coming to the fray, how does that lead to energy demand for, say, perhaps coal, obviously a big driver for the bulker sector? So your thoughts on the bulker market, and maybe red, yellow, or green as well.
Yeah, I think, well, first of all, of course, nuclear, there's a long, long way to go. I mean, there's a lot of R&D to be done there for this to become something true. So we have to rely on the temporary alternatives that we have, such as like scrubbers and LNG or green ammonia and all this stuff that they're talking about, which, again, they do not solve the whole problem that we have in terms of decarbonization and zero emissions. So, but in any case, I agree. I mean, the congestion issue is a big problem that we had to face, especially with Chinese ports, detaining a lot of tonnage there. But I think we should have we need to look at the fundamentals of the market in terms of supply and demand. And when we look at this, of course, although the difference is not so big in terms of percentage, but demand is higher than supply, and this is the natural recipe for a healthy market. Full stop. I mean, we don't need to say anything else, but it is a fact that having more demand, and we will have. I mean, it's and the shipyards are not delivering many ships on the dry cargo side. So we should see, especially 23, 24. Quite a healthy market. This is my view. And volatility, absolutely. This is part of the business, and it happens for many reasons. The market in the Pacific is good. Everybody comes here. The Atlantic has no alternative, so it goes up, and people keep moving ships around. So this is the nature of our business. But look at the fundamentals: supply and demand. And this will be actually what will be the driving force of this market. And just to finalize, China is you can't stop China. I'm sorry to say that, but they're going to be there. There's a lot of people there to work. There's a lot of space. There's a lot of money, and this is what everybody needs for things to happen. So yeah, 23, 24, very positive. Yes.
JJ, we've heard from very positive outlooks on LNG and bulkers. Your thoughts on the tanker and the container market? Briefly, I think we've got 10 minutes left.
I think something in container side I want to share with everyone is a strike. Yeah, I mean, in previously, probably a few years, we were heard one strike. But now in many developed countries, the strike, I'm not say daily, but very often now. So for container operator, they have to, because you cannot predict a strike. So if your ship in port has been, hit a strike, you will hit your schedule and the forward schedule as well. So we increase the, containers operator, but your ship already fixed already. So this will create a more disruption for container side. In my view, this should be the red light for container. For tanker side, because tanker at the moment, there's two markets now. One is the international marketing, one is the Russian marketing. Because these two markets already made the oil fleet inefficient. And also there's a trend, the offshore Russian market, they have some old ship bought from the international market to transfer the Russian oil. So reduce the supply in international market. So we'll continue to push the tanker market going up. So we're giving green light for the tanker side.
Thank you. So I guess to summarize, general outlook, green mostly, maybe with a tinge of yellow. LNG bulkers, definitely green. Containers with strikes, and I guess earlier you talked about the order book. It's obviously the largest order book that we have amongst all these sectors. That's something we should be a bit cautious about. So maybe greenish yellow. And tankers, we see this two-tier market where Russia, or the ships moving Russian oil, is sucking out tonnage from the international market, and obviously strong tanker earnings as a result that we see. Overall, a very positive outlook for the next 2 years. Now we have a bit of time left. Maybe I just want to touch on, earlier CII and EEXI. Obviously, it kicks in 2023. That's only 4 months away. CII and EEXI is obviously benchmarked to IMO 2050, which the shipping industry needs to reduce its carbon emissions 50% relative to 2008. There's obviously more talk that we should be moving to a 1.5 degree alignment, and these trajectories could potentially become more ambitious. Pietro, what do you think are the commercial impact of sort of these decarbonization targets? And should they become a lot more ambitious, how do you see that filtering through into the shipping markets?
Yeah, I think the impact is there because there is a cost involved and somebody will have to pay the bill. So that's what my strong view is that there should be sharing. I mean, people should be, it's very easy for IMO say, okay, now we need to do this and we want zero emissions by 2050, but give means for this thing to happen. You see, I think. again, I am the opinion of that there should be sharing, and everyone should contribute, because then it's going to be easy for everyone, and it's going to happen. And because the problem is this: I mean, if you have a cost, of course, this will be transferred to the final user in some way, and freight costs will have to accommodate these additional costs. So yeah, there will be costs, and they need to be shared. Yeah, my view.
Arjun, do you want to add on to that?
Yeah, I think we have to look at EXXI and CII slightly different to each other and a different perspective. EXXI broadly will be managed because the older dry bulk ships, the dry bulk fleet is anyway trading at a speed which is below what, compliance of EXXI by and large will reduce the maximum speed number of older ships will have to be able to do, but they're not doing it anyway. So I think EXXI will probably not affect the dry bulk market so much, or even the tanker market for that matter. In the container side, there will be some impact, but there's enough supply coming anyway. I think the real impact will come from the CII regulations, and especially as it moves progressively. And I think what is going to start happening in the dry bulk definitely, and possibly in the tanker market, is a sort of two-tier market, which, I don't know if you were around when double hull tankers came into being. So
I was, yeah.
Were you? Okay.
I'm a lot older than I look.
Yeah, okay. But I think that's where the dry bulk market's going to start ending up. So you're going to have a lot of shippers or charterers who will not touch some of the grade C and D vessels, so they are getting much more, the consumers getting much more conscious about these things. And now that you have a benchmark, a way to measure what is a acceptable vessel, so you're going to end up having a very distinct two-tier market. So any of the older vessels will start being pushed to sort of minor trades. So yeah, and two-tier market means two-tier sort of rating as well. So yeah, I think that's CII will start making a lot of difference and probably make some of the older vessels unviable.
Okay, but I guess with the strength of the markets, even if you're an older, less fuel-efficient vessel and you're trading with, say, not a first-class counterpart, you would still be able to generate enough cash just because the supply and demand fundamentals are good enough. Or
it depends on, I suppose, a little bit on regulation, but also on what the consumer will accept. By and large, everybody is going to start questioning carbon footprint for everything you do. So if that starts coming out, I think we've got till 26, the CII carries on. So I think there will be a major change. It will influence a lot of vessels not becoming harder to trade.
and potentially increase demolition as well, I guess, if the freight levels aren't.
Yeah, it's a little bit hard to say, but I think, it's in our hands as consumers eventually to decide what these vessels will do.
Okay, thank you, Arjun. I think we've got time for one last question. Maybe I'll pass it to JJ to wrap up. Obviously, everything that we mentioned, CII, EEXI, owners need to decarbonize. They need to look to alternative fuels. Could you provide us with a brief update on sort of what are the alternative fuels that you see? And we all know Maersk has gone out in order and chosen methanol. So besides methanol, there's obviously a lot of other alternatives. How do you see that bunker fuel demand sort of coming into play in the coming years, and when do you see that occurring? Is it in 2025, 2030? Over to you, JJ.
Thank you, Susie. I think, we talk about loads of EEXI and CI and the reduced speed. To be honest with you, as an engineer, the speed to reduce to a certain level, you can't reduce it anymore. So you have to go in the resources, like an engine maker or shipyard, from these resources. It is why when we talk about the carbon emission, what we're talking now, there's no shipyard, no engine maker. It's like ask our car owner to reduce the carbon emission. It's quite tough. In my view, at the moment, LNG still is the leading alternative fuel in next 2 years. But by 2 years' time, I believe, like methanol, biofuel, or other alternative, more, economic cost alternative fuel were available. And by 5 years' time, I believe like a methanol or, like a biofuel will take the leader. and the ammonia, hydrogen, maybe better will be available. 10 years time, personally believe ammonia, hydrogen, or battery will become industry using for the shipping. It's similar like a Tesla car. 10 years ago, nobody believed Tesla will become so popular. Now it's actually in our life.
Okay, no, thank you, JJ. Now I think that about wraps it up. Thank you so much, panelists, for your time, and thank you everyone for listening. Thank you.